At the beginning of the year, EV maker Rivian said it could produce nearly 50,000 units of cars, and analysts speculated a solid 40,000. The bad news is none of these expectations will be met this year. Why? Let's tell you more about Rivian's biggest problem and Rivian Stock Analysis for more. After going public in 2021 as one of the largest IPOs ever, Rivian was catapulted into the spotlight, with many expecting it to measure up against the EV-dominating Tesla. Auto experts claimed it was positioned to take over the industry, beating the likes of Toyota, Volkswagen, and General Motors. Investors developed confidence in the company when it got an order for 100,000 units of electric delivery vans from Amazon. This was expected to boost the company's revenue tremendously. When the e-commerce giant made a U-turn and struck a deal with Stellantis in January, investors began to doubt the company's position on the market. Subsequent days made it all the more difficult for the company to prove its worth. Why? Let's find out shortly. Customers of Rivian woke up to the shocking news that the EV maker had hiked EV prices even before it could start meaningful production, which was also going to affect customers who had already made orders for its electric vehicles. The move backfired as the company faced intense backlash on social media, causing it to roll back on its decision to increase the prices of its EVs. A much bigger problem occurred in March when the company reported a significant loss of $2.5 billion against its revenue of only $54 million. Even more devastating, the company also said that its parts and supplies could only produce 25,000 vehicles against the initial 40,000 analysts predicted. By the middle of that same month of March, Rivian stock was trading at less than half its value at the beginning of the year. Before we tell you what Rivian's biggest problem has been so far, why don't you subscribe to this channel, as we bring you more on the happenings in the tech and stock industry. So, what exactly is Rivian's biggest problem? Rivian's problem concerns higher material costs and ongoing supply chain issues. In the year's second quarter, the company reported a net gross profit of $704 million and is expected to continue running at a loss with higher costs persisting.
Come on, let's get you started.
Once Rivian's 180-day lockup period expired, major shareholders in the company like Ford wasted no time and dumped nearly 15 million shares in Rivian, causing its stake to fall from about 12% to 9.7%. Regarding the issue of production, Rivian laid off more than 800 workers to help the company with profitability.
Bloomberg News reported earlier in July that the company was already planning hundreds of layoffs. Although Rivian ultimately has to do what's right for the company, since it's a startup company, this is unfortunate for those workers who were laid off. Now, I'm sure these layoffs won't affect the main production departments, but they will definitely affect the less critical ones instead. These layoffs come less than a year after Rivian's successful IPO or introduction, where they raised the largest IPO of 2021.
CEO RJ Scaringe stated that this move was to accelerate the development of newer models like the R2 vehicle and ramp up production. He also said that layoffs are necessary because inflation hurts the company's bottom line. Is there any solution to the underlying difficulties the company is having? Let's give you more details on what the EV maker is doing to stand its ground in a bit. Rivian also nixed its less expressive Explorer R1T electric truck models to focus on the adventure model. Customers with pre-existing orders had to either upgrade or cancel their orders. Rivian spokesman Tanya Miller told The Verge that discontinuing the $67,500 truck was to enable the EV maker to deliver as many vehicles as possible.
And I think you are good to go.
Not so long ago, Rivian had to make a recall again. About 13,000 cars that had already been delivered to customers were recalled after the company discovered a structural defect. Scaringe said in a letter to customers that Rivian is making the call because a fastener may not have been sufficiently torqued. Although it wasn't likely to happen and the company had not recorded any casualties, it was said that the nut could loosen at any time. The company discovered only 7 vehicles out of the delivered ones have the issue, but it recalled nearly all of its cars to exercise caution. Scaringe assured customers that customers would have their vehicles fixed within minutes, and that a relatively smaller percentage may need to have their parts replaced. Do you think this recall is going to affect demand for Rivian vehicles? Tell us what you think in the comments section below. This year, production issues greatly affected the company, setting shares down 67%. It intends to use net proceeds from IPO for working capital and other corporate purposes. CEO Scaringe is confident that the EV maker is progressing, although supply chain issues affect productivity. Rivian is doing its best to scale up production and capture a chunk of the market. Check out our video titled, How Rivian Stocks Work. This is simpler than you thought. Thanks for watching this video. We will come your way again later. Enjoy your day.